The crypto market is yet to experience another bullish trend as several cryptocurrencies continue to experience extremely low values. Famous investor Kevin O'Leary believes that there is light at the end of the tunnel and that the current market trend will bounce back in the future. Stick around to the end of this video to hear an extensive analysis regarding your crypto portfolio. Kevin O'Leary, the host of the television show Shark Tank, recently provided an optimistic outlook on the future of blockchain technology as well as Bitcoin. He believes that the current crypto downturn is nothing more than a bounce. Historically, the Canadian businessman was highly suspicious of cryptocurrency. However, he shifted his position and put 3% of his assets into Bitcoin during the course of the previous year. Since that time, he has been an ardent supporter of the business, and he has made a solemn oath not to sell his stockpile despite the current precarious condition of the market. In a recent interview, O'Leary restated his perspective, arguing that the long-term implications of blockchain technology's increased efficiency, productivity, and transparency are enormous. According to his point of view, the existing bear market is likely to persist for some time, but it will eventually end. He forecasts that an unparalleled amount of institutional capital will be invested in cryptocurrency, which he believes will drive the next uptrend. He advises investors to be patient because remarkable results take a while. Despite the fact that Bitcoin's price has plummeted almost 50% in the past year and more than 65% from its all-time high in the midst of inflationary increases and other cryptocurrency declines, Bitcoin is still the most valuable cryptocurrency. In particular, approximately a month ago, Terra's value collapsed. Mr. O'Leary additionally cautioned that the cryptocurrency markets may have a significant capitulation event in the relatively near period, which may generate even more uncertainty for investors. Nevertheless, he cautioned that such an occurrence would give a fantastic chance to make purchases. While the renowned investor acknowledged that it may be difficult to anticipate when the event will occur, he claimed that its occurrence would indeed be extremely beneficial for the crypto market. He stated that a capitulation event would eliminate all of the failed business models and assist the markets in unloading their excessively stretched speculations.
This problem started about a day after the original memo from the SEC about 5 months ago talking about carbon credits being audited. And so basically what's happened since is, and this is a little complicated, but the data is irrefutable now. When you set up a mining operation, as we had multiple public miners last year, they were being used as a proxy by institutions to buy Bitcoin because the price of the mining shares, whether it was a Hut 8 or a Riot or Marathon and many others, really was a great proxy for Bitcoin volatility. You bought those shares, Bitcoin goes up, the shares went up. Bitcoin goes down, the shares go down. It was almost a perfect correlation, regardless of how many megawatts each of these companies had mining. Nobody cared about the source of power at that time. But then along came that memo, when basically what it said is, look, if you're a public company, you got to get your auditors to sign your public statements. And we're going to add a little attribute. If we have our way, we're going to actually, if you're using carbon credits or offsets, we're going to have you sign that too. And basically what the SEC was saying is they were calling BS on carbon credits. So many companies said, look, yeah, I'm using coal or flared gas to mine Bitcoin, but I bought an acre of the Amazon. It's got 1,000 trees, so it's an offset. Well, the SEC said, get me an auditor to sign that. So if you call any of the big 5 audit firms, they're not going to sign that because there's no ledger to carbon credits. It was that day, and I won't forget it, when I started getting calls from the larger sovereign and institutional accounts that were using the index to strategize holding Bitcoin by holding the public miners. And wow, were they dumping stock. So, I mean, they read the writing on the wall. A lot of these companies are going to face bankruptcy because they levered their Bitcoin mining, borrowed money to build more facilities, and they're offside 50, 60% plus leverage. The bigger problem, Pomp, is this. Let's say you want to raise new capital, because I'm in the mining business and I want to raise, let's say you're going to do a 300 megawatt facility in a friendly state like North Dakota or Montana or South Carolina, where you can get power. You can get a plug-in for less than 4 cents a kilowatt hour, which is what you need to be globally competitive. You have to find a power source behind the meter. In other words, where you can prove to someone that you are compliant from a carbon perspective. And that really points to nuclear power and hydropower. So all of a sudden, places like northern Norway, where we have a facility being built in a company called BitZero, we're behind the meter. Every electron comes from a giant hydro dam, no need for a carbon audit, and we're able to raise money because the institutions that provide the funding, whether it be debt or equity, understand there's no risk. Take any other public miner, ask them where their power comes from, and they say it's blended. They don't know, basically. And that's the problem the existing miners have. In a way, they're kind of screwed. But I think a new generation of miners emerging. I'm not the only guy doing this. There's other funds out there that are basically finding hydro and nuclear power and regenerating this industry from scratch at a carbon zero footprint. It's not just Bitcoin mining, it's Ethereum, it's any data center. This is going to be the issue going forward. So the older miners, their stocks are down 70 to 90%, not coming back. Unfortunately, for Biden and the administration, there were some policy mistakes made early in the mandate over 2 years ago, particularly around energy. There's two pressure points that are causing all of this political activity. One is inflation on energy. $5 to $7 gasoline per gallon is just a killer when it comes to midterm elections. There's no getting around that problem because people see that every time they fill up their truck or car. And then, of course, protein. The food supply chain in the US from chicken on down is up between 30 and 48%. So food and energy are very political in nature because you're forcing families to spend so much more of what they make on things that they never had to worry about. Now they do, heating their homes and just feeding their families. And so it's very difficult to reverse the mistakes made in energy. Let's start there. Canceling the XL pipeline, canceling leaseholds on federal land, shutting down offshore development, canceling the activity that was going on in Alaska, which was very prolific in terms of providing gas and oil, really making it hard to figure out carbon costs if you're using any kind of fracking service. And so all of a sudden, of course, we're no longer energy independent. We're in a perverse situation that even before the Ukraine war, we had Russian tankers coming into the Boston Harbor. So that's policy mistakes, and it takes time to fix that. When Biden goes over to Saudi Arabia to get more oil from them, it won't matter to energy prices in the US because we don't have enough refinery capacity. We just canceled another refinery. We need 3 more. Again, bad policy. Now, where this is going to manifest itself in a very ugly way is at any midterm election, the incumbent loses seats in the House. I fear for Biden's administration a complete slaughterfest in the midterm election. Everything's going to turn. It's going to be brutal. And I think, what do you do? What can you do? If you want balance, you're not going to get it here. There's going to be a lot of seats lost in the Democratic Party. And in a way, they did that to themselves on bad policy. And of course, they're scrambling, and anything can happen between now and the fourth quarter. But I'm not optimistic for him. And, he was given a mandate to solve for the pandemic. He did a reasonably good job there. But this energy policy and what happened in inflation caught him off guard. And I'm not sure what can be done to fix it because it's not getting better anytime soon. This is not the path of least resistance. And I do not want to, comment on what they're attempting to do, other than saying, from my point of view, this is a personal opinion, it borders on insanity. It's not a good playbook. And I think if I were on that board, I would be pretty noisy in the boardroom about this. Now, having said all that, I'm more optimistic on other strategies in terms of getting some policy in crypto. And we should talk about the next 6 months, because you've got lots of evidence now of bipartisan interest in getting some policy in place. Not in a combat way by suing regulators, but in a way in cooperation on a bipartisan basis. And let's make it real easy, okay? We're not going to get everything regulated overnight. We may not get an ETF in the US for 2 or 3 more years, but that's not the only thing that matters. What I'd like to see, and a lot of others too, would take one asset, a really bipartisan asset, in the form of stablecoin. Now, not all stablecoins were created equal. We know the meltdown in Luna. That story is well known. Algorithmic-based, stablecoins may not be the best idea. Be very hard to launch another one. But assets like USDC that are backed by the US dollar have not broken a buck recently. And if that was made and was allowed to be regulated, it could become the default payment service for the world, backed by the US dollar, because everybody would use it, because so many commodities, including oil, are actually paid in US dollars. Imagine if you could use USDC to transfer between jurisdictions and geographies. It's far more efficient, better ledger, more transparent, lower cost, way faster.
What did you think of Kevin O'Leary's analysis? Do you share an optimistic view of the crypto industry? Share your insights in the comment section down below. If you enjoyed this video, kindly like and subscribe, and we'll see you on the next one.